Okay everyone, hello. I'm just going to take you through today depreciation, disposal of a depreciation or a non-current asset. So I'll take you through this problem here, how it was calculated, how we went through this. I'm doing it manually, so just straight up on the screen there, using T accounts as well, and I'll just be recording, taking you through the steps of disposal. So we have here we have a machine. Will & Co purchased the machine for $60,000. Net of GST. When it says net of GST, it hasn't been included. It was done on the 1st of July 2019. Additional costs were $4,000. Okay, and that was for installation. And if you remember, that is a capital expenditure. It means it adds to the price of the asset. We made these by cash. It is anticipated that the machine we kept for 10 years. This will help us in the calculation. These three figures I've highlighted in this figure 2, the residual value and calculation of the straight line depreciation. The machine was sold on the 30th of June 2021. Pretty simple because it's a full year. Right, so it was sold for $38,000. Okay. We're going to record this information in the ledger, so we'll do that below here. So, first step in the process is to depreciate up to the time of the sale. So we're pretty lucky here, it's the 30th of June, but sometimes it might be 1st of July, or, sorry, 1st of April, which we'll then have to make adjustments there to get the depreciation right. But the point of this video really is just to take you through the steps. We're going to transfer the original costs to a new account called the disposal. We're going to transfer the accumulation to that same account. So we're going to try, the object of this is to get rid of the asset off our records and away from off our records and completely gone. We're going to record the selling price, making sure we make a gain or loss, try and work that out, then transfer that gain or loss to the disposal account. Then we're going to record a new asset. Okay, so let's do this. So to calculate the depreciation, it's the original cost. The original cost of $60,000. It's actually $64,000 because we include the installation. $64,000 minus the residual value, which is $10,000. Divide that by the amount of the lifespan, which would be 10 years. That equals $5,400 per year of depreciation. That is a full 12 months of depreciation. So let's have a look down here. We recorded on the 1st of the 7th, 2019, we recorded the purchase of the machine in a new account there for $64,000. We include the installation, so that's capital expenditure, and it adds to the cost of the asset, the original cost, the value. The next year, at the end of that financial year, we depreciated on the 30th of the 6th by $5,400. We recorded that in a depreciation expense account as well. Okay, and then we wrote this off to the P&L summary. It's a P&L summary. We closed off the account. Each year, revenue expense accounts are closed off. We then would have recorded that in our financial records. Okay, so I'm up to this point now. 30th of June 2021. Okay, so first step in this process is depreciate up to the time of sale. So we're going to depreciate it. I know it depreciates by $5,400. So I'm going to record that in 30th of the 6th, 2020. Very crudely done, 2021, sorry. It's here, but that's the idea really, just to quickly show you how it's done. So it was $5,400. Since it's straight line, it's the same amount each year. Reducing balance, however, it is a bit different. So $5,400 That is in the accumulated depreciation. And we also do a reciprocal entry here in the depreciation expense account. If we don't record this, it won't balance, and we need to record an expense, the depreciation as an expense, but also have it here as a negative asset. Okay, so what we do now, first step is to transfer. We've done that, we depreciate it up to the time of sale. That's evident by this entry. Whatever time it is that you're selling it, you've recorded up to that time. After that, we don't own it, so we need to release it from our records. We're going to transfer the original cost to the disposal. So I've got my original cost, which is over here. We're going to transfer this over to the disposal. We need to do this over here. So we've got to do several entries here. So in order to move this amount over, we need to credit the account for $64,000 for the same amount. And this is done on the, I remember the date, 30th of the 6th, 21. I should put particulars in there, but it's very quickly being done. So this amount is being transferred over here to this disposal. This disposal account doesn't have a nature. It is a working account for us. It's a working account, so it's enabling us to see where we're going here. 064, that means this is off our records. It's now in this account here for working out. We've done that, transferred the cost over. So now we're going to transfer the accumulated depreciation. So in order to do that, 10,800, basically whatever the amount is on this credit side, and I'll put the date in. 21. It's a 21. So that amount there is over here. So 10,000, is it 30th of the 6th, 21, put 10,800 over here. Done that. We're going to record the selling price. Okay, so the selling price is going to be recorded on the credit side. Sometimes we have a bank account as well. It depends on how we sold it. So the selling price was $38,000. Okay, and that was the same date, so I won't write that in again. So, objective here is we're going to work out if we made a gain or a loss on the asset. Okay, so we need to work out here how much the asset was worth to us. The asset was worth to us, if we get the original cost, subtract the accumulated depreciation, about $53,000, $53,200. We only sold it for $38,000. So you can really work out it's probably making a loss, but we need to actually record this in the records here. Okay, so we're going to go 10,800 plus 38,000. That equals 48,800 is on this side, and 64 on this side. So we need to balance this off. We need to put another figure in, which will be the amount that we're losing. So it'll be a loss on disposal. The loss on disposal is going to be let's work this out. 15,200. So what we need to do now, so that both sides balance, we're going to go to this new account called loss on disposal. This is an expense account, so we're going to put this figure on here, 15,200, and that was done on the 30th of the 6th, 21. So this account, so that gets rid of this account, that one's gone too. So we've closed off both these accounts and we've moved them over here. So as you remember, if you remember, these accounts then revenue and expense accounts are closed off to the profit and loss summary at the end of each year. So we'll do that now. Let's record them over there. So P, end of each financial year, P&L summary, and for the whatever amount it is. Okay, and these will get recorded in the statement of profit and loss, these two here, in the expense section. 621, and I'll put whatever amount that is for 5,400. So that's done every year. I just leave it there so you can see it there. So that's been done, and object is the one as well. So you can see here what we do is you can't just do one entry and just leave it there and say, oh, we sold it, and put it in the machine account. We need to take into consideration all its current value to us, as well as the accumulated depreciation. We need to get in and remove the object of this disposal process is to remove it from our reports completely, whatever the asset is, as well as its depreciation. I'm going to do up some more videos in a moment, just taking through the depreciation process, the calculation, doing up depreciation schedules, also just doing a few how to record depreciation.